Ladies and gentlemen, we are witnessing a historic moment in the world of finance. The collapse of 3 banks in 1 week has sent shockwaves around the world. The question on everyone's mind is, what happens next? Is this the beginning of the next financial crisis? And what are the implications? As you all know, the fallout from SVB's collapse is spreading rapidly across the global financial markets. Investors and financial institutions are already scrambling to buy the dip, taking advantage of cheap debt and the opportunities presented by a market in turmoil. But what does this mean for the rest of us? Is this a sign of economic resilience or a looming disaster waiting to happen? Personally, I believe that the implications of SVB's collapse are far-reaching and potentially catastrophic. We cannot afford to be complacent in the face of a crisis. The collapse of one of the biggest banks in Silicon Valley is a clear indication that our financial system is deeply flawed and we are in need of major change. We cannot continue to bail out failed bankers and repeat the mistakes of the past. And yet they will. That's what's happening today. That is the concern that I have. For a lot of people, they are simply waiting, absolutely waiting for this to all end. But in my opinion, we are just beginning, because what the Fed is going to do is going to be a game changer. You came here for the truth, so let me unveil that for you. Here we have it. In the past, there would have been a simple way out. The Fed, the Bank of England, and the European Central Bank could announce an emergency cut in interest rates and pump a few $100 billion of extra liquidity into the system. That's what Ben Bernanke, Alan Greenspan would have done. Bond prices would have rallied, and the banks would have spare cash that would fix the problem. This time around, with inflation already running out of control, that's simply impossible. I would interject just for a moment that they're going to do that. To cut rates and to print more money now would be a guarantee hyperinflation with horrific consequences for every developed economy. So my thoughts right here are that the Federal Reserve is going to do the not QE. Do you remember that? If you're on this channel, 2019, you might remember. But essentially they say, we're not doing quantitative easing. We're just going to do this market operation thing. It's just a technical change. Just a technical change. Yes, the balance sheet will be climbing, but it's just a technical change. And they will refuse to acknowledge that this is quantitative easing. And they're going to be pumping up something to keep that banking system alive. And as long as they get that, of course, the devaluation of the currency will continue. It is very important to see the devaluation not against other currencies, because that's always in flux. Over the past few days, the dollar has been declining. But are other currencies stronger? Not really. You know, look at it compared to assets, and you see the devaluation. Real assets are essential right now more than ever before. Let's move on. Instead, they only have really one option. Depositors have to be protected and with public funds if necessary. If you have money in the bank, you need to be able to get it out. Anything else guarantees a full-blown collapse in confidence in every form of financial institution, and very quickly, paper currencies as well. But unlike 2008, 2009, the banks themselves should be closed. If bondholders and shareholders lose their shirts, then that's just their bad luck. We can't do the bailouts all over again. But yet we know that they will. Isn't that right? Silicon Valley Bank's failure may lead to smaller Fed rate hike. I think they're going to pause hikes. They're going to say, we want to assess the situation. Like if it's still turmoil, come the time of the next meeting coming up soon, if they are, everything's resolved, it's all good, no problem, they can say, okay, we're going to raise by 25 basis points and we're going to monitor the situation. They're going to mention this. But if there's still a lot of chaos and there's going to be failures and so on that come up over the next week, well then I think they're going to basically say, we're holding it right here for a minute and then we're going to assess the situation and be real strong and tough. We're going to make sure inflation's taken care of. We're just assessing the situation. But that might be the last hike. We'll see. How SVB was doomed by a bad bet on mortgage securities and the Fed rate hikes. If you haven't seen the other videos, what happened right here was basically that they got this huge influx of capital between 2019 and, basically a 2-year period from 2019. And during that time, they're taking all this cash in. That's short-term stuff, okay? Because the depositors, they may want their money back at any moment. This is the company that dealt with corporate banking as well. So money's always flowing in and out. But they took the cash and they invested in something long-term, mortgage-backed securities, the worst garbage you can get. The reason they did that, I believe, was because that's the stuff that was giving a yield. So hey, I could use depositors' money, I could put it right here in this mortgage-backed security, I can get some yield out of it, make some money out of it. Well, that changed when interest rates started rising. Nobody in the financial industry thought that this would happen. None of the YouTubers thought it would happen, and here we are. Why? Because it's all part of a cycle. It's a contrived and manufactured cycle. Look at this. SVB followed spreads around the world from London to Singapore. A problem that existed for Silicon Valley has spread around the world. Do you see how this happens? The financial crisis should have taught us that. The housing crisis should have taught us that. But we don't learn. Everything is interconnected. Blindsided by SVB, credit traders are rushing towards safety. You're watching the bond market bonds basically being bought up, and the volatility in the bond market spiking. This is a time in which we realize people want to flee to safety. I thought it was interesting because it goes even into cryptocurrencies. Silicon Valley Bank collapse, BlockFi left $227 million at failed bank. You remember this? Bankrupt company involved with FTX, and they're tied up into this as well. People were asking, is there any involvement between FTX and this? Well, this is what I found for you. Some level of involvement, but it looks like everybody's going to get their cash back, perhaps. I think anyway. We'll see what happens in the coming 2 weeks, and so on. Then there's going to be litigation. There's going to be all kinds of, suing this guy, the CEO. He's got to have a clawback on his sales and stuff. Who knows? Who knows what's going to happen? Coinbase pauses conversions between USDC and US dollars as banking crisis roils crypto. That connects in with this, basically just saying that the second largest stable coin, USDC, basically has moved back towards its dollar peg. So this is one of the cryptocurrencies that it balances itself out. It's a stable coin between the US dollar and it. They figured that out. At the time of this recording, Bitcoin ended up getting to 24,000. So it got pushed down below 20,000 and then it came back up to 24,000 at a time in which the US dollar fell, gold went up, and Bitcoin went up at the same time. I think people took this as an opportunity when it dipped below 20 to get in there and buy. Interesting how so many things are interconnected today. It's wild, it's crazy, I know. But I think in the end, the takeaway for today is that the Federal Reserve is going to be pressured into doing some sort of not QE, and that means some manipulation behind the scenes where they refuse to admit that it's quantitative easing, but ultimately it is. And perhaps right now we are at or near the very top of where they'll be. And the expectation is that in September, they're going to cut rates. That would be crazy. Inflation red hot already. We're in a big world of hurt. What does that mean? You got to have real assets. And I'm going to be doing a video about real assets. And if there are going to be bank collapses, where should I put my money? All that stuff. I'm going to do that in the video this week. So what do you got to do? You've got to subscribe to the channel and check back. And you will hear from me about that information. You got to keep checking this channel. Type in, when you go to your search in YouTube, you're not going to probably get the notification. So you got to go and type in The Money GPS every day, and I've got new videos for you. I'll see you tomorrow. Take care.